From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Coming up today, K-State's Dan O'Brien remarking on yet another bullish week in the grain markets, spurred on by USDA reports earlier in the week. Dan will advise you producers to look to the quarterly grain stocks reports as the market movers going forward. Then K-State's Dale Blasi will discuss how you producers feeding backgrounder beef calves can make that program work even in the face of these much higher feed grain prices. He endorses the idea of limit feeding and recommends that you use the online BeefBasis tool as a guide there. And in later, K-State's Mary Knapp on Kansas agricultural weather. All that and more here on Agriculture Today.
Make hand washing a healthy habit everywhere you go. Wash your hands with soap and water for at least 20 seconds, especially after going to the bathroom, before, during, and after preparing food, and before eating. If soap and water aren't available, use a hand sanitizer that has at least 60% alcohol. Life is better with clean hands. A message from the Centers for Disease Control and Prevention.
This is Agriculture Today and our Friday edition. Thanks for tuning in once more. Well, where's the ceiling in these wild and woolly grain markets? That's a question that's prevalent out there right now, and it'll be part of our discussion with Dan O'Brien joining us once again, grain market economist, K-State Research and Extension. Dan, based in Colby, northwest Kansas. Dan, the markets are, at least in part, still riding the wave created by those friendly USDA numbers from earlier this week.
We closed on Thursday at $5.34 for corn, and that's not wheat, that's not soybeans, that's corn at $5.34 in the March contract. Notable that the March is at $5.34 and a fourth it closed at on Thursday the 14th, but the new crop Dees is at $4.57. So there is some discount. That's about 75, 80 cents. And for soybeans, the March contract $14.30 for the lead, and the new crop at $11.96. So you got about a $2 spread there. It's interesting that the ratio of the $11.96.5 to $4.57 3/4 is 2.6. And, for all the volatility and the high height of these, to have basically a somewhat standard ratio that favors soybeans somewhat is kind of surprising. I mean, it could have been 3 or 4, who knows, given what's happened in the soybean market. There's where we stand. So that if there's anything that will be one of the next movers in the market, it'll be prospective plantings reports. When they come out, I think that's at the end of March. And then the acreage report at the end of June. And those coincide with quarterly stocks reports. And I'd like to throw in a comment on the quarterly stocks reports.
Please do.
We have these numbers that have been coming out of the USDA. And this last report was a prime example of the apparent challenge that our good friends at NASA, and I'm not disparaging them at all, but the great challenge of coming in and figuring out just what these numbers are. So here we're talking about corn, and a big surprise in the corn supply-demand balance sheet was that the USDA came in after projecting about 14.4 billion bushels, and the November report came in on the January one at about 14.1, basically dropped at 324 million bushels. And that's more of a variation than we've seen almost ever. So that, again, our good colleagues at USDA and NASA are having a tougher and tougher time, it seems, of getting a handle on just what's going on a lot. And for this case, it was late harvested acres that kind of come in, and the yield dropped from November 175.8 down to 172. So challenge upon challenge. And that number dropped the crop down to 14.18 and ended up worked its way through the supply demand balance sheet and anticipating some rationing. You got high enough prices of going to ration some use, and they dropped every category back 50 or 100 million bushels. We were fearing that was going to happen, and now you have reports out there of ethanol plants at least temporarily scaling back, if not stopping production for a bit, because they're dealing with $5 corn. And ethanol, it has just been so-so in terms of the price of it. So you got that supply-demand balance sheet coming in. now you're down to what you and I been talking about for months. Well, gosh, whatever happens if we get down to 1.5 billion bushels of carryout? Well, that's what they projected, 1.55 billion bushels. And some rumors in the market that maybe we've run usage enough out there that maybe we're below that too. The other side of the equation on soybean balance sheet, you drop that number down to 140 million bushels. Well, these are down to levels where we were in 2012-13. Stocks of use now projected to be, I think, 3.1%. So that's getting the brooms out and sweeping out the bins type of tightness. When does rationing happen in the soybeans? As long as when soybeans run up, soybean oil and soybean meal go up with it. Well, the rationing happens when the buyers in China can't afford it anymore. That's when rationing happens, because this is an export-driven deal, export and crush. And the crush coming as a result of the bean and oil moving too. So when people wonder, well, where are the markets going? I would have to wonder how much higher they could go. I'll probably eat those words, but I'd have to wonder how much higher they can go and the buyers still be able to afford them. And we're seeing that on some of the usage industries, especially for corn already.
Dan, want to speak to one fundamental for sure. That's on the grain sorghum export side. Business is doing extremely well right now, and as it has been for a time. So that's becoming a pretty important constant to the market.
Well, the USDA acknowledged that and raised, whereas they were scaling back usage estimates for corn, they raised the grain sorghum export projection up to 290 million bushels. Had been 275, and that's different than they scaled back corn 100 million bushels, but they raised up grain sorghum by 15. Relatively speaking, that's a big deal. But the thing to remember is when grain sorghum really was going well several years ago, it was about 300, 325, 350. So we're still not quite to the maxes that we'd seen. And, of course, this is a very China-dependent thing. And our basis levels are tremendous. When you look at cash prices around Kansas for grain sorghum, they have sixes in front of them every place. And 6 is closer to 7 in all parts of the state except down southeast Kansas. The highest price that I could see off the elevators that I follow in Topeka and Salina, those are terminal elevators. And the country elevators be somewhat less. So it's amazing. And those same locations, since we're talking about Topeka and Salina at 684, cash corn prices 515 to 519. I mean, an astoundingly good corn price, but an amazingly good grain sorghum price. Just really something to consider. I might add in the time we have, kind of mention wheat a little bit.
Absolutely wheat, should.
We should. That's right.
This again is an astounding surge in that market.
Cash prices for wheat in these major terminals that I'm watching anyway, all start with a 6, every one of them. Colby 602, Garden City 608, Salina 621, 604, and Hutchinson 621, Topeka 637 down in Columbus. And something that you and I have been watching all the way through, saying that, gosh, the USDA has that wheat projection healthy. Still, it's 985 million bushels. And when I see the amount of forward purchases for all U.S. wheat, they're at, we're 32 out of 52 weeks through the year, about 62% of the way there. We've got about 79% purchased ahead. We've shipped about 55% of that. So the shipments are trailing the pace that you'd expect to see in the market. You know what? We're 55% of the way to USDA's projection. We're 62% through the marketing year. So we have purchases the USDA is banking on to come to fruition. The thing to watch, my honest opinion, is that we go another 5-10 weeks. Then you start to wonder into this, and if the same pattern holds, are we at risk to see the USDA supply demand balance sheet estimates for this marketing year have to eat unshipped planned exports? Let's say we come in at 925 or 900 instead of this 985 we have, then I think there's some risk out there at the end of this marketing year, which is end of May, that we'll say, gosh, that stuff didn't come to fruition. And so we're going to have to scale back the export number, and it's going to all go into that ending stock. It's going to raise ending stocks and be a negative on the market. So I don't wish that, but that's the trend we're seeing, and the fear I have in the wheat market, that the supply-demand balance sheets, we go another 5 or 10 weeks and the export numbers don't pick up more, that will be facing a negative adjustment in USDA numbers, and as we get into April and May.
And Dan, want to circle back to something that you touched upon earlier, those USDA grain stocks reports and the quarterly reports in particular. You say you're advising producers to keep an eye on those for market signals and the potential volatility those could, in fact, ignite.
The last 2 to 3 years with the USDA's challenges of getting these crop sizes right, and again, it's a challenging thing to do. I don't begrudge them that. But they've been forced to make changes and back adjustments. They do that at the stocks reports. So when does that happen? At the end of March this year, we'll have the planting intentions report and the stocks report for the DSFEB timeframe. So it'll be important. Gives them more information to look back and say, gosh, maybe that crop last year did have a problem. Maybe we overestimated it. And that's what's happened the last 2 years. They've overestimated the previous crops. You have another one of these things at the end of June, and there'll be acreage report and a stocks report. Really, the fireworks report has been the September report, when they figured out that there was more crop than last year. And most of the time, the January report, well, yeah, we know it's important. Well, this go around, we just talked about what they found in the corn market. So we don't know exactly what direction prices are going to go, but it's getting to where we can anticipate when the volatility is going to happen. It happens around these quarterly reports and these planting intentions acreage reports. They go along with them, pre-harvest. So for anybody that hasn't sold grain or wondering about pre-harvest selling, I just would keep that end of March, end of June, into September, and now first part of January as really dates to watch, because it's turning out that the stocks reports are the truth-telling numbers, and they're forcing changes in the rest of the supply-demand balance sheets and perspective on the market. So that's where we're finding ourselves looking for solid guidance nowadays.
Good input and a good weekend to you, Dan. Many thanks.
Thanks, Eric. Take care.
That's his weekly grain market segment. Dan O'Brien with us, grain market economist, K-State Research and Extension, opening up this Agriculture Today.
A social distancing tip.
Putting distance between yourself and others is critical to slowing the spread of coronavirus. So here are ways to stay in contact without the physical contact part. Call, send a text, set up a video conference, post on social media, dedicate a song on the radio. If you have symptoms of fever, dry cough, and shortness of breath, call your healthcare provider before going to their office. For more info, visit coronavirus.gov.
Let's all do our part, because we're all #AloneTogether. Brought to you by the Ad Council.
We're back now on this Agriculture Today. Well, we just spent a few moments talking with K-State's Dan O'Brien about these roaring grain markets. Now, there are repercussions, obviously, for cattle producers in as far as their feedstuff costs likewise escalating. And how to navigate that situation is our subject here. Dale Blasi is with us. He's a beef cattle nutritionist with K-State Research and Extension. And you've been tracking what's going on in the grain markets as well, Dale, from the cattle feeders' perspective. And these could be challenging times for the feeder.
Absolutely. Attempting to procure contracts that are ending and trying to recapture and finding out that there's been a significant inflation of what you were used to spending and seeing a 20, if not 40% increase in a lot of the various co-products that we utilize in our beef growing and finishing diets is certainly eye-opening.
The leading question then is, can producers manage through this and still be successful from the economic vantage point at the end?
Well, Eric, I think there's some opportunities for folks if they do their homework and utilize some of the great tools that exist at Kansas State. One tool that comes to mind, and I rely on it quite a bit, and that's the tool known as BeefBasis.com, developed out of faculty at the Department of Agricultural Economics and some former graduate students. And it's an excellent tool to help producers look at the existing value of calves, what the current corn contracts are, and then looking into the future. And I utilize this tool quite heavily, especially now as folks may already have their calves laid in for summer grass or contemplating that purchase and then looking at the value of those animals and how much value of gain those animals are able to yield through the first part of August or so once we're done with our typical double stock grazing seasons.
And for purposes of demonstration here, you have been throwing around a few numbers using that tool and getting an idea of what producers might well want to be focusing on in their feeding management for those backgrounders.
Right. I looked at a couple different scenarios, looking at even buying calves today and holding them through the end of March, looking at purchasing or having on hand the value of a 700-pound calf today and even a 550-pound calf, and looking at the value of gain. And the value of gain allows a producer to look at the buy-sell relationships as well as the cost and how much total monies are available in a gross perspective to help determine with your feed costs as you incorporate that in there. And, of course, with the lighter-weighted calves, we have the potential of death loss as well. But I'm seeing some fairly optimistic values, especially for the calves that are heavier than normal and just limping them along on a daily gain. I'm talking gains that are 1.5 pounds, and that lends itself well in terms of the cost of the inputs that we have for those animals. So we're looking at a $1 per 100 gross value of gain of about $140. And if we put our numbers together, we can dead grass these calves. A lot of folks do that, unburned pasture, and are just holding them through, and maybe during the inclement weather periods they're providing some feed on a fairly routine basis, but perhaps not on a daily basis, where you have the added yardage costs, for example, in a dry lot scenario of, say, anywhere from 30 to 40 cents per head per day. And a lot of producers have taken advantage of that and are carrying these calves somewhere in the ballpark of 50 cents a head a day. So you're looking at $15, and then you got associated costs of providing some supplement, if you will, as well as keeping an eye on them and everything like that. Going into a dry lot scenario, our costs of gain are somewhere in that $1 with mass medication and everything coupled in there, maybe as high as $1.10, $1.20 for the gain. So there's some opportunities in using limit feeding, for example, in a dry lot scenario to really restrict the intake of those calves. And we conducted some work back in 2007 and actually restricted calves. We had 4 treatments. We had an ad libitum treatment, which means those cattle were fed to appetite. And then we restricted 3 other treatments to 2.5%, 2.25%, and 2.2% as a percent of dry matter intake of their body weights. And long story short, we saved anywhere from $25 to $30 over a 67-day period. And then all the calves were immediately placed on grass at the beef stocker unit for a typical 90-day grazing season. We saw a level of compensatory growth with those calves that were moderately restricted, and those calves that were restricted at the 2% in the dry lotting phase, they never really caught up. They performed well on grass, but in terms of true body weight at the end of that entire 150-some-odd day period, they really never caught up. And, we typically charge somewhere in the ballpark between $85 to $90 over a grazing season. And so there represents some great opportunities on grass to try to cheapen up your gain costs for these calves as they're looking at going into the feed yards later this fall. So there's some opportunities with restricting intake and getting those calves firmed up, stretched up, if you will, so that they really can express their growth potential on grass. And, of course, that is all predicated on the fact that we do get adequate and timely moisture when we need it.
That was the wild card that immediately popped to mind because we have this dry winter. So we're counting on a more reasonable weather pattern to support grass.
Absolutely. And, we can get these calves limped along doing about a $1.40 value of gain. The lighter cattle coming in are buying cattle today at 550 pounds and holding them through 950 pounds. We're seeing gains of around 2 pounds a head a day. And even then, we're seeing a value of gain of about $1.20. So there's some room in there. And the one thing that my good colleague and one of the founders of BeefBasis, Dr. Glenn Tonzer, always reminds me is, as producers contemplate the use of this, not to count their nickels too soon until they have some degree of market protection. surrounding the value of those calves. It's unseen in terms of what impacts the value of these calves with escalating grain and byproduct costs, what the cost of gain will be into the feedlot, and ultimately what the value of those calves will be come July, August.
Dale, once one commits to a limit feeding program of this type, need they stay with that plane of nutrition? Because grain prices can shift. We don't know what's going to happen. But if you're going this route, you need to stay with this route throughout till turnout?
Well, a lot of those factors that come into that is what do you have on hand in terms of supply? Mm-hmm. If you do have an existing contract that's allowed you to reach out a little bit further into March and April, certainly what we found with our research, and we rely quite heavily on co-products in the limit feeding diet because of the digestible fiber that exists in the co-products and not from the native starch that we see, the 72% starch that is typically in the corn. So we need to be really careful with respect to the health of the animals. And so, I just ran a diet this morning, and projected cost of gain with limit feeding somewhere around 86 cents or so. There's some savings there, and we do see a response in terms of the efficiency of gain with animals that are limit fed. I really think it would be foolhardy to completely feed as you normally would. I think there's opportunities if producers especially have silage on hand. We had a relatively good silage year in many parts of the state. Calculate what you have on hand and budget accordingly, and you can stretch that material out and get you into hopefully the green grass that is coming here come March and April.
You've been utilizing it right here in our conversation, but you're, again, encouraging individual producers to go to BeefBasis.com, pull up this tool, put their own numbers in, and map out a strategy here.
I think it really helps people look and see there's windows in there, there's various sizes of calves, and perhaps that might come to the point where people might think about actually doing the cuts on their calves and figuring out what the best destination is. Of course, that tends to complicate management in terms of multi-groups and so forth like that. But there's some opportunities, and the strength in BeefBasis in terms of the lot size, in terms of number of calves you have in there, the basis that is calculated into this program using the current futures corn market and stuff really kind of gives a person an idea on where they need to be and if they need to idle those calves back like I've suggested with what I've saw with this particular program or not.
That's at beefbasis.com. Again, in support of the approach of limit feeding, growing calves, and working through these comparatively expensive feed grain prices that exist in the market currently. So producers, give the concept due thought and do your homework on how you might make that work for you. Dale, we appreciate the input. Thank you.
Thank you, Eric.
And he has done considerable research work in this area of limit feeding beef calves. Dale Blasi, beef cattle nutritionist, K-State Research and Extension. Now this break, after which we'll be back with today's agricultural news headlines for you, along with this week's Kansas Wheat Scoop and more for you. Still ahead here on the K-State Radio Network and Agriculture Today.
With the shortage of primary care physicians, especially in rural areas, health education and disease prevention are vital. K-State Research and Extension programs address quality of life, personal development, and health behaviors across all life stages of all social economic groups. To learn more about health education, one of K-State Research and Extension's 5 grand challenges, visit www.ksre.ksu.edu.
Now in its 97th year of broadcast service to agriculture in Kansas and the Central Plains, this is the K-State Radio Network and Agriculture Today. Eric Atkinson here, and next up, today's agricultural news headlines for you. These courtesy, in part, of DTN. Outgoing USDA Secretary Sonny Perdue says that U.S. farmers lead the world, but they need continued freedom to innovate, and they need more trade agreements. Here's more from the USDA's Gary Crawford.
The Let's go back to April 2017. Sonny Perdue's first day as USDA Secretary telling employees,
"My vision for the Department of Agriculture is to be the best run, the best managed, the best regarded agency in this country."
Fast forward now almost 4 years.
I sure hope we've lived up to that mission in your eyes.
Sonny Perdue in a pre-recorded message to the American Farm Bureau Federation's virtual convention this week. In that message, Perdue describing the nation's farmers as
great patriots who selflessly commit their lives to feed and clothe their fellow citizens.
And he said they need to be free to innovate and use the latest science to produce more, but also
we need more markets abroad to sell the abundance of American agriculture. This means more trade deals like the USMCA and holding China to their trading commitments.
Perdue said the U.S. should set its sights on emerging markets such as Southeast Asia and Africa. Gary Crawford for the U.S. Department of Agriculture.
China's Ministry of Agriculture and Rural Affairs has now published import approvals for 5 genetically modified corn and cotton traits. Some were approvals for new traits, namely a glufosinate-tolerant corn trait with 2 rootworm proteins from Syngenta, and Bayer's SmartStax Pro corn trait that has waited for 5 years for this move and the Chinese regulatory authorities. The rest were renewals of past biosafety certificates issued for BASF and Syngenta's cotton traits. All 5 traits are now approved for import over the next 5 years until December of 2025. Now, the approval of Bayer's SmartStax Pro trait is likely to have the most immediate impact for American producers. It contains a novel mode of action against western corn rootworm, populations of which have evolved resistance to every BT rootworm trait on the market. That new trait won't be fully commercialized until next year. The other new approval from Chinese regulators was for a new molecular stack from Syngenta, which combines 2 existing BT rootworm proteins now found in Agrisure RW and Duracade. The stacked trait is still awaiting import approval in the European Union. And the International Grains Council has cut its forecasts for global grain production in the 2021 season. That was done yesterday, owing in part to worsening expectations for South American crops amid dry weather. The intergovernmental body says now it forecasts total grain harvests of 2.21 billion metric tons, 10 million tons less than it forecast in its last report back in November. Nonetheless, the figure would still be the highest ever. The IGC lowered its forecasts for 2021 global corn crop by 13 million tons to 1.13 billion tons. It also downgraded its forecast for soybean production to 359 million tons from 365 million tons. Wheat production forecasts revised moderately lower by 1 million tons to 768 million tons. Now, this downgrade comes amid the dry weather in South America thanks to La Niña. It's raised concerns about the health of that continent's crops, among them corn and beans, of course. In response to the dryness, Argentina had imposed a 2-month-long ban on exports of corn from December the 30th in order to ensure ample supplies for its citizens, but overturned that ban on January the 11th with an export quota of 30,000 tons a day. And in recent months, Russia has also leveled a quota on grain exports and export taxes on wheat in order to stabilize domestic food prices in that country. To be successful in the marketplace, customer confidence in a product is essential, and that's why an action taken late in 2020 was highly important to the wheat industry. It allowed for continuation of U.S. federal grain inspection services, which assure that U.S. wheat buyers abroad are getting quality in their purchases. Marcia Boswell has more on this on the Kansas Wheat Scoop. Marcia?
The end of 2020 brought a flurry of legislative activity in Washington, D.C., but one quiet bill signed in December preserves an important competitive advantage for U.S. wheat farmers through 2025. Approximately half of U.S. wheat production is exported each year. The U.S. reputation of quality, reliability, and value is backed by the independent certification of wheat shipments by the USDA's Federal Grain Inspection Service. FGIS grain inspectors evaluate all wheat exported from the United States, giving it a grade and providing valuable quality information as it is loaded for export onto trains or ships. This third-party verification by a government agency is efficient, Services continued uninterrupted during the COVID-19 pandemic thanks to agency adjustments, and respected by global grain buyers and sellers as the gold standard for grain inspections. The official FGIS grade certificate also provides information on the wheat shipment's characteristics to buyers ahead of the grain's arrival, allowing them to make product decisions and avoiding costly conflicts between buyers and sellers. This federal grain inspection system is regulated under the U.S. Grain Standards Act, which was first passed in 1916. The law provides the legislative authority for the USDA to establish official marketing standards for grain and maintain official grain inspection and weighing procedures. The law must be reauthorized regularly, and the most current iteration was due to expire on December 11, 2020. As a result, Kansas Wheat Partners in D.C., the National Association of Wheat Growers, and U.S. Wheat Associates worked together to provide support for the bill's reauthorization. According to Darren Padgett, Oregon wheat farmer and chairman of U.S. Wheat Associates, this law and our system of standardized independent grain inspection makes U.S. wheat more valuable. The proof of that came this year when many of our overseas buyers expressed a real concern that the pandemic would interrupt our supply chain and FGIS inspections. Kansas Senator Pat Roberts sponsored the United States Grain Standards Authorization Act of 2020 as one of his final pieces of legislation as chairman of the U.S. Senate Committee on Agriculture, Nutrition, and Forestry. The bill was passed by the U.S. Senate in November, followed by the U.S. House of Representatives in early December. President Trump signed the bill into law on December 11, 2020, reauthorizing the Grain Standards Act through September 30th of 2025. Thanks to this legislative action, Kansas wheat farmers will continue to benefit from the accurate and timely grades and weights provided by FGIS inspectors and export elevator staff to customers around the world. For Kansas Wheat, I'm Marcia Boswell.
Thanks, Marcia, and this is Agriculture Today.
When you are in need of timely, reliable, and trusted information, K-State Research and Extension is here. Whether it's organizing people, information, or resources, they have the necessary tools. Community comes first for K-State Research and Extension. For more information and to connect with your county's extension agents, visit www.ksre.k-state.edu.
We'll finish out this Agriculture Today on Kansas agricultural weather. Once more in for her Friday visit is climatologist Mary Knapp of K-State Research and Extension. And Mary, we remain in a state of dryness. As we recap the moisture situation, pretty spare around the state this past week, was it not?
Right. It was very light. For the most part, the moisture was confined to the eastern areas of the state, particularly east central and southeast Kansas. And that was really at the beginning of our monitoring period, Wednesday and Thursday of last week, as the storm was a little bit slower to exit that region. The rest of the state didn't really see much at all. There were a few flakes in southwest Kansas in the Morton County area and another area in northwest Kansas that caught a little bit of it. Basically, the storm systems have been splitting around Kansas, and so there's been snow and rain to our south. They even had snow in Austin, Texas, and there's been snow and moisture to our north going through Nebraska into Iowa, but Kansas has missed out on most of that.
Then is the drought monitor worsening in the state?
We did see, it was kind of a split again, just like our moisture. We did see a degradation or an increase in the moderate drought in northwest, north central Kansas. There was a pocket of abnormally dry thanks to the moisture that we saw in November in that area. But it's been a long time since November, and they have seen very little moisture since then. So that has been degraded a little bit. On the other hand, in eastern Kansas, where we saw 3-4 times our normal weekly precipitation last week and additional precip this week, we did see some improvement in that area. In fact, the East Central and the Southeast were the only divisions that had above normal precipitation for the week. Northeast was running about 90% of the normal, but when you go out into the western parts of the state, we're looking at 15% or less of that. So the Northwest and West Central averaged 1/100th of an inch of precip. The Southwest fared a little bit better, and they were 2/100ths of an inch of precip. That's really not going very far.
Hard to get very excited about that. You say that you are tracking, though, in tandem here, something that would be important to winter crop conditions, the evapotranspiration rates.
Right. A new tool that's been out for a couple of years now is called the EDDI, and that's the Evaporative Drought Demand Index, and it uses satellite data to measure how much demand for moisture there is in the atmosphere. And that is correlated based on the time of year and a number of other factors. And this last week was fairly neutral as far as that demand. It wasn't a particularly high demand. And of course, temperature and wind are some of the factors that go into that. But again, what the upper level of the atmosphere is like is also factored into that.
So that's semi-favorable for winter wheat. It could be worse.
It could be worse for the winter wheat. And of course, that's looking at the entire profile of the atmosphere, not what might be occurring right at ground level. And we know the surface is extremely dry. With the winds that we're experiencing today, we're going to have some blowing dust. That's going to create additional problems for the winter wheat, especially the wheat fields where you've had uneven emergence and you may not have had as good of root development as would be desired. So you've got a chance for blowout in those areas.
And our temperature patterns have been warmer than we would expect for early to mid-January, you say?
Right. It has been warmer than normal, not excessively warm. The average over the state was about 3 degrees warmer than normal for this last week. We had quite a roller coaster of temperatures. Highest was 67 down in southwestern Kansas at the beginning of the week, and that was a 67. And the coldest was a 6-degree reading in the Tribune area towards the end of the monitoring period. So again, the roller coaster that we typically see in January is still going on.
What's ahead then, and are we still looking for those increased chances of moisture for the latter half of this month, as we discussed in a previous visit?
Yes, we do have that. If we look at the 6 to 10 and the 8 to 14 day, which carries us through the second half of the month, both of those favor above normal moisture across the state. A little bit stronger signal for the 8 to 14 than the 6 to 10 day outlook. But it's really interesting to note that the strongest probability for above normal precipitation lies to our south, going across New Mexico, Oklahoma, Texas, into Arkansas, similar to the track that our last winter storm took. Caught that southwest corner of Kansas, but most of the state missed out on that. When we look at the quantitative precip forecasts for the next 6 days, not completely dry like our last one was, but looking at 1/10 of an inch or less for most of the state, the exception being in the southeastern corner where they may see closer to 1/4 of an inch. From the southeastern corner of Kansas down into northern Oklahoma, in Missouri, and to Arkansas, you don't have to go very far, and we've got probabilities of precipitation of as much as 4 inches. So again, it'll be a very sharp gradient between those that have significant precipitation and those that are missing out on it.
So a slight shift in the movement might be of benefit.
Right. You get a little bit more northerly track on that, and we could see somewhere closer to the inch range of precipitation rather than the 1/10 of an inch.
And that moisture, because you say we're looking at cooler temperatures, might well be in the form of snow.
It does look like there's a better signal for snow than for rain out of this because, again, we're looking at colder than normal temperatures across most of the country as we move into not the 6 to 10, but in the 8 to 14-day outlook.
Well, a good weekend to you, Mary, and we'll talk next Friday. Thank you.
Thanks, Eric. We'll look forward to it.
Climatologist Mary Knapp, K-State Research and Extension, and thanks to you for joining us as well. Enjoy your weekend. Eric Atkinson for Agriculture Today. This is the K-State Radio Network.